let's just focus on this here. I always go on the daily or the weekly to find out what the market's doing. Let's just talk about this. Since we're on the daily right now, I can already spot liquidity. Notice how if we were here at that point in time, let's go right here. Okay, this is kind of a nice example. Price comes down. It doesn't take out liquidity, okay? This high did not take out liquidity. It just filled in an imbalance, right? Filled in the fair value gap. Not all of it, most of it, right? But this isn't the supply. This is not a swing. Oh, well, actually it is. Actually, it is a swing low. Excuse me. It took out this. So price came down, went up, took out that low. This becomes a swing low. So this is a confirmed swing low here. Let's focus our attention on this. Price runs up, right? Now, when price runs up, you can automatically see that we swept here, ran. Price left more liquidity here. You can see price also swept here. So this becomes a new swing low, right? A new swing low, a swing low. We now need to wait for the swing high to create. That means we'd want for price to come back down here. Okay, now the price comes here. It's not fully mitigated yet. People are already automatically buying here. Now, I don't do that personally, right? We want for price to come and sweep some sort of low, right? Internal liquidity. But there are people that buy this, right? Just like this. You can see how fast price went up. It didn't actually break the high. These are the first buyers in, right? That means there isn't liquidity in here, so therefore I can't buy. Now this I would look to buy here, but this is more an advanced tactic. We have what's called a hidden low right here. So if you use your line chart, you can see that right here. So that's our hidden low. So we could look to buy in here on the lower time frame to push price up. Let's continue though. I don't want to show you this exactly. Okay, there we go. Notice what happened here. We just had, I saw this liquidity, right? There's your swing low. There's your liquidity. Okay. Now, I spot liquidity first before I did supply and demand. Now, this is a very interesting thing here because I want to show you this. This is an internal swing low. This is the external swing low. But I want you to look over here on my crosshairs. Look to the right. You see a wick taking out the swing low too, right? This is why supply and demand can be worthless. But if you're spotting supply and demand and you're just entering like this, right, to hold it up there, you would have already been out, right? Price would have taken your sell stops, including these guys, right? So this would be irrelevant. But you might be saying, yeah, but RoyalBluFX, what about this? You did say there's a buy here. Yes, but we're not going to talk about TPs. I mean, I would have TP'd the supply zone actually right here. And being that this is the daily, we could look to target this supply as the target. That's the nearest supply. Okay, so we can look for a chalk boss in here and look for price to rise. But here is where it's important on the daily. Just looking at this, right? We swept this. Now, it didn't respect the swing low, which is fine because what did I mention to you in the drawings? That swing lows and swing highs can also be manipulated, okay? So your first job as a trader is to look for liquidity first because that is the driver of the market, okay? So we have the liquidity swept, and then you can go down on your lower time frames. And we trade the session, so we would look for the session of the day when it opens, right? We trade New York, and we're on the US tech, so we'll only be trading New York here. From this low to this high, you can see there's a swing high and a low. And a swing, it's not a swing low, but it's a swing high and a low. Swing high would create when price chalks here, and actually price comes back. However, we'll trade before the change of character actually happens, okay? Because a lot of traders wait for this high to be broken, right? Then they wait for price to come back, maybe even trade the next day and then take price bullish. But we trade here and now when the market opens. So here, automatically, I can already see there's a bunch of liquidity sitting here. And then, excuse me, guys, there's a bunch of motorcycles going by. I have my window open, but hope you guys can hear me. A bunch of liquidity is set here. And now we can look for an entry. We can pair up this entry with the demand zone right over here. Right here. Okay? So there's your nearest demand zone, right? That's your swing low that took out all this liquidity, right? Ran up, came back down, took out the liquidity, and enter. So you could have safely entered here. You might think, yeah, but isn't this aggressive? It's not aggressive unless you know where the market direction is. Okay? We had confirmation. We had a liquidity first. Then I matched our swing lows. Okay, and this is actually a swing high here. So my bad. This is an external swing high. This is a swing low because this swing low went up and broke this high. This is a swing high. It chalked. It took out liquidity. It chalked. So this is a swing high, swing low. We also have a swing low from here. It's sharing a swing high here. You can see this low chalked here. We have a swing high chalking here. Right? It took out liquidity also to the left. Right over here. You can see that it took out that candle right there. So that is a swing high, right? So this would have been a safe entry, right? This is how you guys do it, right? So notice I didn't look for a supply and demand. I just looked for liquidity first.